What's going on, Steve? Can you hear me? Can you guys all see me and see the screen? Yeah. Let's see here. All right, we'll give everybody just a couple minutes here before we start. How do I change?
Morning.
Morning. All right, we'll go ahead and get started. Looks like it's just the three of us for now, which could be good for you guys, so you guys can get all the attention.
Can anyone hear me?
I can hear you. Yeah, can you hear me?
Shit.
I can hear you.
Can't hear you.
You can't hear me? Frederick, can you hear me?
Yep.
Okay. Steve, you got me?
Can you hear me now?
I can hear you, yeah.
Okay, good. I can hear you too.
You got me?
Gotcha. Good morning. Sorry, I'm a little late.
Awesome. Sounds good. Okay. So let's go ahead and get this thing started. We'll try to keep it around an hour or so. Just to recap kind of what we talked about last week, I'll just do a live version of this instead of drawing it out. But basically last week we talked about motive waves being a 1, 2, 3, 4, 5 wave structure in the direction of a trend. with the one wave being a impulse wave, meaning it's going in the direction of the trend. A two wave is a corrective wave, meaning it's going against the trend. And then a three wave is a impulse wave. A four wave is a corrective wave. And then your final fifth wave, followed by typically a corrective wave structure, which could be either a this entire structure could be a one wave, this could be a five wave structure in a smaller subwave count to create a one wave. And then this ABC could be a two wave structure. And then we would have a three wave up from there. Do you guys have any questions about the basic, that basic structure, motive impulse? Everybody good on that one? Okay. So we're going to kind of dive into corrective waves. And corrective waves can get extremely confusing because there's so many different patterns that they can, morph into. And, unfortunately, the way it works with correctives, you don't know what the pattern is until it's complete. Until it's 100% complete, which is why corrections are so difficult to trade if you're actually trying to trade them. Usually it's best to stay out of a corrective and then enter on confirmation once it's finished with a clear five wave impulse off the low, and then moving into a 1, 2, 3, 4, 5 impulsive structure, in the direction of the trend. So there are several different types of corrective waves. You have ABCs, which we see here, and I'll try, if I'm going too fast for you guys, just, let me know. And if you guys have any questions, by all means, just hop in and ask. So the three types or four types, I guess, of ABC corrections are your zigzag, which is broken down into a 5-3-5 structure, which basically means your A wave is a 1, 2, 3, 4, 5 wave structure down to create your A. And then you have a 3-wave structure up to create your B, and then a 5-wave structure down to create your C. Zigzags are typically deep corrective structures. They, like you can see here in XHV, this here right now is the way it stands, is a ABC, a very deep zigzag. It's actually, well, yeah, we'll just leave it at that for now. That's an example of a zigzag. And you've got a regular flat, and then you've got your flats. You've got three types of flats. You have a regular flat, an expanded flat, and a running flat. Your regular flat, that structure, I've got it says 3, but this is actually showing a 5, which I screwed that up. Let me fix that. All right, so your regular flat is typically a 3-wave structure, an ABC for your A. It could also be a 5-wave structure, and then a 3-wave structure for your B, and then a 5-wave structure for your C. Well, let's see. So I'm sorry, guys, hold on. B, I forgot to talk. Okay, let's talk about the B. The B can be any corrective structure. Let's go back to the zigzag. The B can be any corrective structure. So this could be a triangle. It could be a WXY. It can really be any correction at all, but it's never a 5-wave structure. So a B can never just be a 5-wave up. So if you have a 5-wave off of a low or a high, it's never a B in a corrective wave. So if you're thinking it's got an ABC and then you got a 5-wave, it's not a B. So you can immediately eliminate that as a potential scenario. All right, so the regular flat, well, and then each one of these also, I say typical divergence. So what I mean by that is momentum indicator divergence, like an RSI. You'll have like bull divs or bear divs forming usually on your terminating wave. So like your C waves, your Y waves, or your ABCD triangle waves, you'll usually have some sort of typical divergence in place. So your expanded flat or your regular flat, usually your B will terminate near the start of your A wave. And then your C wave will usually terminate near where the A wave completes at. It could, so that's basically what causes, double bottoms or what people call it, or, if this is flipped around, a double top. Expanded flat, same type of structure. You've got a 3-3-5. The difference being that your B wave typically will go above the origin of where your A started. And then your C will go way below your A. So it's basically like a zigzag, just where you have a high B. And then your running flat is a 3-3-5 structure as well, but your C ends above where your A terminated at. Any questions on those, guys?
Maybe just a quick thing. We're looking at the Bitcoin chart now. The structure that brought us to 69K, it looks obviously like it's a corrective structure. Am I wrong in that? It was ABC down and then an ABC up to 69K. Is that accurate?
Yeah. So the corrective structure that I see right now, and again, until it's complete, it can morph and it can change. So as of right now, to me, the way this thing looks, it looks like a WXY, which means you've got an ABC in your first corrective structure here, and then you've got an ABC up to create your X, and then what I'm seeing right now is a potential ABC down. So you've got this structure actually here. So your A is actually a WXY. And then your B looks to me like it's just a WXY as well. So you've got an A, a B, and then a funky looking C, which would be a WXY structure. So that's a WXY in a B wave. And then right now, it looks like it's impulsive. So as of right now, it's moving impulsively. Here, we'll zoom in just a little bit more. As you guys see, I've got two different scenarios, but let's just assume this is what's going to play out, because as of right now, the way this is moving and the way these subwaves are moving inside this ending diagonal here, everything's moving kind of in three-wave structures. So it's leading me to believe that this is actually a leading diagonal to end what this possibly could be, either your one wave up, or your one wave down, and then you'll have a two wave, and then you'll have a 3-4-5. So that would be an ABC. Now this could potentially turn into a WXY if this ends up just being a three-wave structure. So this could turn out to be this one wave. This could be an A. You could have a three-wave structure up for a B, and then you could just have a final C wave down, which would end up, probably somewhere around 27,000. So, I mean, your targets are still roughly the same. It just depends from a terminology standpoint on how this wave unfolds. So if this thing unfolds in a three-wave structure, it'll be an ABC, which would turn this entire ABC into a WXY versus an ABC, because this C wave here, in order for it to be a C wave, it has to move in 5 waves, not 3. So if this thing moves in 3 waves and not 5, it's going to turn into an ABC, which would make this a WXY. Does that make sense? Which would, again, make this entire corrective structure, which this is a macro 4, it would turn it into a WXY, terminating somewhere around 26, 28,000, depending on, what happens with capitulation and how deep the wick goes. I mean, you could get a wick all the way down to 24K, but ultimately my main targets would be 28,000 roughly. And then you would couple that with, some divergences once you start getting this structure down with your RSI. Any other questions on these structures? So what probably can become confusing, Steve, which we kind of talked about a little bit last time, was the ABC versus the WXY. And really the difference between an ABC and a WXY is simply this last wave here would move in a three-wave structure. So, you can still have the same, you can still have a zigzag pattern in a WXY. So this would be a zigzag pattern. It would be a deep, nasty corrective, which actually on XHV is what this is, because what you have is this is not an A. Well, it's still an A. This is actually a zigzag. That's not a three-wave structure. You guys see that? I mean, I'm sorry, that's not a five-wave structure. This is clearly a three-wave structure. And then this here is a three-wave structure to create your B. And this looks like it is, actually looks more three-wavy to me. 1, 2, 3, 4, 5. So this entire structure is actually a WXY, not an ABC, but it's still a zigzag. It's still an extremely deep correction. So either way, however you mark this as an ABC or a WXY, it's really kind of irrelevant. A lot of EW guys would probably get upset that I said that, but I'm not an Elliott wave maximalist. I mean, the point of Elliott wave is to be able to determine market structure and not get caught up, at least in my opinion, in the terminology and what the letters are and, and that sort of thing. So I try not to bog myself down too much into the terminology as to, what this is. I mean, on Twitter, I can get EW maximalists that come in and they come after me about certain things, and I just don't care. I'm here to make money and to trade, and whatever works for me, that's all that matters. So, if I've got this labeled as an ABC instead of a WXY, it ultimately does the same thing, and it means the same thing, and it points to roughly the same targets. So I don't get too bogged down into that.
Can I just ask one quick question, and I'm going to shut up after that?
Yeah, no, you're good, man. Ask as many as you want.
Can you go back to the XHV?
Yep.
What throws me off is where to mark it. So is it a 3 or a 5 wave? So you have the A and the B, the blue with the circle around it. So that looks to me like it could be a 5-wave impulse off the low. There's that big green bar.
This here?
Yeah, that big green bar could be the 1. Then it dips to the 2. Then there's a second pretty big green bar. That could be the 3. It dips again. And then where you have the B, to me, could be a 5-wave structure. So that would change if I'm thinking it's corrective or impulsive off the lows. And it's where to mark the tops and the bottoms that it gets real confusing to me.
Yeah, so what you got is, this looks like an A, B, C, right? So that's clearly, that structure there is clearly 3 waves. So now
but then that other little, yeah.
If this went above that, if it went over 577, then you'd have to figure out, you'd have to dive into the details and say, okay, what the heck's going on? But at the same time, even if this did poke up above here, your 1 wave, it wouldn't follow a typical, it would break EW rules, because this would be a huge 1 wave, a 2 wave, a very small 3 wave, a 4 wave, and then a 5 wave. So, I mean, it would look, it just wouldn't fit the eye test, I guess. And then given obviously what happened afterwards, you would know that that's, I mean, it's not an impulse, it's not a 5-wave structure, off of a low. But since it didn't break that 577, the top there, you can assume that this is either a 1. You can assume that this is a 1, 2, maybe 3, 4, 5, and then that could be an A, and then a 1, 2, 3 B, and then a C, or, I mean, as it goes. So it's not, so this again, so it's not a, that's not a 5-wave. So this is, that's an A. This is probably actually an A, B, C, a B, and then your C.
All right, and you go by wicks. You're saying it didn't, the B wave didn't come above, but closing it did, but just the wick didn't get above. And we're
Here?
going by, yeah.
Well, no, I'm talking about your wick. This wick right here is the top of your B.
Okay, we're going wicks.
Yeah. And then you have your, next corrective structure, assuming obviously that we are now, trending upwards. This entire structure here is corrective, meaning that it's going against the trend. So this 5-wave structure begins and starts something. It starts one of these, corrections. And then obviously you've got your, your triangles as well. Where'd that go? So this, I would label this an A, a B, C. Now that I feel it's finished. Now, obviously, if we break below this C, then something's off and it's not finished, and I was wrong. So I would label this currently as a, like this. So this is, so you've got an ABC here. So you've got a zigzag structure here for your A. You have a 3-wave structure B. You have a 5-wave A. You have a 3-wave structure for your B. And then this looks like it's actually probably, as of right now, an ABC. So that's a 3-wave structure. So that would turn this, technically speaking, into a WXY.
Easy.
Yep. But again, I mean, as you're learning corrective structures, it's just, I would not get bogged down into the terminology and whether it's a WXY or an ABC, because ultimately it does the same thing. Really what you want to pay attention to is just what the wave looks like. I mean, you can take your little, path thing. I mean, just trace the clear waves. And then all of a sudden, well, it deleted, but you get my point. You can start to see what those structures really start to look like in more detail. And then I was going to, okay, so triangles. You guys have any other questions about those before we hop into triangles?
Jules, I had a quick question. We might be getting a little off track here, but just from like going back to Bitcoin and like a macro standpoint, like something that I think you always try to preach is none of this is perfect, right? And anything can change pretty quickly, and you have to be ready to adapt. And, looking at what you have as your main two, counts right now, there's obviously a lot of confluence and reason why, that is your primary thesis at the moment. Something I'm just noticing is that it seems like a lot of experts or analysts out there, whether they do it from Elliott Wave or, they're looking at on-chain or patterns, whatever they use to kind of trade and predict their best path, have similar target points right now for Bitcoin, whether they think it's going to be an extended bear and we're going down, or this is the end of the macro fourth wave going down to 26, 28K and going from there. I guess my question to you is, the market, a lot of times it seems like a lot of us have that same guess right now or hypothesis of, hey, it's heading down here. And a lot of money's on the sidelines right now. And just something that I'm finding interesting from an on-chain perspective is it seems like there's a lot of supply that's, off exchanges. The 1-year HODL rate, things like that are the highest they've ever been. And it seems like it's kind of like forming a powder keg. Whether or not we go down to 26, 28K and go from there remains to be seen. But what are your macro invalidation levels for where you look at, like, okay, we had that ABCDE triangle. It invalidated because we went below 39K. Now we're looking at the other two primary theses for down to 28K. What would happen now that we're back onto these two primary theses for these to be invalidated and you to say, okay, well, maybe we're not going as deep as we thought. Maybe we are in some type of other corrective structure. I'm just curious on how you pivot your hypothesis on to try to adapt quickly when things change. Because as we all know, the market likes to chop people up and shake people out. And when everyone thinks it's going one way, it goes the other. And just seems to me that we're seeing a lot of, hey, this thing's going below 30K, it's going 20K, whatever you might think. And a lot of times, just in my experience, it seems like people get chopped up and or wait, kind of chopped up waiting on the sidelines. When that concept is popular.
Yeah, I mean, really, it's ultimately a matter of perspective too, because structurally speaking, from a macro view, I don't consider this bearish. Now,
right?
If you bought the top up here and you've been dealing with this for over a year, I mean, you think it's bearish, right? Right. I mean, it's really just a matter of your viewpoint, or I mean, this is a huge correction. What is this from the very top here down to the bottom? I mean, that's 50%. Right. So any normal person would say that's bearish. I mean, a 50% haircut from the top down to the local low here is a nasty correction, especially if you're a retail trader or just somebody that doesn't understand market structure and buys up here thinking this thing's going to 100K because everybody's screaming to 100K. Right. I mean, which
is why I think we see sentiments like that a lot right now, because you see a lot of retail traders who probably jumped in at the top and are now getting not just chopped up, but it's taken a while, right? Because these cycles are lengthening as more money gets poured into it, and I think a lot of those people are either stopped out by now or they're just kind of waiting on the sidelines to go back in.
Yeah.
But I think that's why you see sentiment a lot like that, because you're right, it's a matter of perspective.
But I mean, ultimately from a macro standpoint, in order for us to have a fifth wave up, and in order for me not to say, okay, shit, I got to go back and recount this entire thing from the beginning.
Yeah.
I mean, really, technically speaking, since I'm looking at this as a one wave here, I'm looking at that as a 1, a 2, a 3, 4, and then a 5. I mean, technically, my macro isn't invalidated until $14,000. So, I mean, that would certainly be a really, really, really nasty decline from the top. I mean, that's a 80% loss, or drop from the tippy top. But even at that, we're still technically, from an EW standpoint, bullish, or at least we have one more, macro bullish.
So I guess my question, not to take it too off track, is you're using these fibs, right, to kind of to figure out where that retracement level is going to go to. That's where you have your 5 at the bottom of the Y to complete the 4. You've got it at the 0.382. I guess my question is what would it take for you to rethink, okay, maybe this isn't a WXY, or maybe that Y is not going as deep? Just because I see a lot of similar Elliott wave guys have something, very close to what you have, but some different in some ways. Some have it, going as shallow as 36K, some have it going as shallow as 33K. And I'm wondering how you find that target and where it would invalidate this current thesis.
Yeah. Well, there's several things that could invalidate it.
Okay.
If all of a sudden we break above up here, if we break 48.5, then this structure is invalidated, and we have something else going on. Either this is an ugly ass ABCD triangle still, which is possible. But as of right now, I just try to keep it as simple as I can without making this thing more complex than it needs to be. I see a lot of Elliott wave traders out there making these really complex, and I've got caught doing that before. And then, I'll step back and I'll say, why don't I keep it simple and just, base it off of the real, the more simplistic view of Elliott wave, and go from there, and then allow that to determine what I see and what I don't see. For here, we could get you've got my two scenarios. Oh, come on, get out of the way. This is my other scenario here.
Yep.
Which is the difference between these two is we already have the fifth wave in. So we're in a one,
right.
So we've got our one down, our two up, and then we're, working on our three wave down. So our three wave in this scenario takes us down to 29,000, and our five wave takes us to around 27,000 or so. Whereas this scenario does not have our one wave in. So that's the two big differences here, which if this is the case, which is what I'm leaning towards right now, then we'll have a two wave bounce anywhere from $42,000 to $45,000. And then we'll have our three down, and then a four, and then a five. And that three will take us a little bit deeper just because our one actually starts, down here from a fib standpoint, which, hopefully we'll get time to go into the fibs. When you're determining your targets, you take your fib extension from the top of where your one originates at, one, and then to wherever it terminates, two, and then 1618 is a typical target for your three wave. And then I usually will throw my five wave at two on this fib extension tool. But five waves can change. They can do all sorts of different things. So, just depending on how this actually starts to unfold, like if we drop hard out of this, like all of a sudden, if this thing just drops, then clearly this is the count.
Yeah, right.
Because we're in a three wave right now, and three waves usually are explosive. That's just the way they are. They're the longest wave typically, and they're usually, they move fast. But the way this wave currently is unfolding, it's kind of moving in three wave structures, which is leading me to believe that this is actually an ending diagonal, which ending diagonals move in three wave structures. They're actually it's an impulsive wave. So this is still a five wave. This is a fifth wave of a one wave, but it's moving in an ABC. So each wave is moving in three wave structure, each impulse.
Right.
You got ABC, 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 ABCs to create all five of your waves.
I just think of how many people would get sucked in on this one too, which makes me lean towards this one of that two wave, how many people would get sucked in on that way up to 45, 46K, and then, back down. And that's kind of what I love about Elliott wave is it helps me. I'm not a great trader. And that's something I'm trying to learn. And so, I've definitely learned a lot from that standpoint, but I like using it from a macro standpoint, just to understand where we are in the cycle, where I'm, going into investments, where am I don't want to buy the top and sell the bottom, right? And so trying to understand how close are we to those tops and bottoms
Yep.
and kind of go from there. But I'm just such a firm believer in like, man, whenever I'm seeing the market is thinking, or whenever people start to get super bullish or super bearish, like I'm just ready for the opposite because it just seems to work that way. And I look at this and I say, oh man, like how many people would get sucked into that 45K run and then, you know, get ready to go and then drop back down, you know, below 30s. It'd be
Oh yeah. Yeah. If you got that bounce, you'd hear 100K targets again.
Yeah.
Sure.
Right. All right. Well, thank you for that. Sorry to take us off track here.
Yeah, no, you're good. You're good.
On it.
I'm glad there's only, 4 people in here, so it makes it more interactive, for sure, which is good.
Yeah.
Okay, so your triangles is basically your last corrective structure, and typically triangles occur in waves B, X, Y, or 4. And I've got here an example of KDA. I'll show you that. But let's go down and look at down here. So here's an example of, a WXY where your ABCD triangle would be in your X wave. So, if this was a 5-wave structure here and this was a 5-wave structure, this would actually be an ABC, and then your triangle would be in your B wave. So you do not typically see them in 2 waves. Triangles, you see them in 4 waves or B, W, X, or X or Y's. Where's my KDA chart? That thing's popping up. Get out of the way. So as of right now, KDA has got a triangle and it's B, or this also could be an X, depending on, again, what this wave does. This wave, I've got it on the, let's see, on the low time frame, I have it as a impulse right now, which would take us down to, anywhere from $1.37 all the way up to $2.50. But this also could, if we let's see here, if we end up, so if this ends up being a WXY, we should be, close to a bottom, and this would actually be an ABC. And of course, it could turn into a double zigzag. So this could end up just being a very large A, and then you have a B and then a C, and still ends up coming down to our ultimate targets of, under $3. But either way, this is a perfect example of a ABCD triangle in a B wave or a X wave. And usually, ABCD, the triangles are fairly easy to spot for the most part, but I think a lot of times people will try to force, a triangle into something where it's not, because you can still have, like this. Oh, shoot. Yeah, that's not a good example, but you can still have an ABC that looks like, a triangle, or like a bear flag. Here, let's draw one out. Not a bear flag, I'm sorry, a pennant. So this would be a running flat, not an actual triangle. So the move, the structure of of this looks like a triangle, just simply because you've got two lines, contracting towards each other. And it looks like a triangle, but you would just have, 5 waves down or 3, and then an ABC up. So that would not technically be an ABCDE triangle. It would just be a running flat, but it would look like a triangle. So there can be some confusion into terminology, where people say, oh, it's a triangle, but technically from an EW standpoint, it's not. Anybody questions on that one? All right. So I think, that's really, what time is it? We've got 12:10. Steve, you got any questions on anything in particular you want me to dive into with corrections? I think you had mentioned you wanted me to look at APE, right?
Well, I just thought it's an interesting, it's brand new. And so just to understand like the origination of an impulse and where we were headed, and like, this throws me off here. It's that one wave is just a single line up. It's 2 days,
Yeah.
and it's like, I don't want to take it from there. It just doesn't seem right to me. And then I feel like my whole count is going to be off after that. That's just a start.
Yep. Yeah. And that's, I hate charting these types of charts. There's no data here clearly to really get a good, comfy feeling as to what the heck's going on, because this could still also be a large ABC structure. This could be a one wave here. It could be an A. Then you've got your ABC, so that could be a 2 wave, or it could be a B. And then you have a 3 wave up, from your C. So this could be the start of a 1-2, or you could be, let's see, or you could also be, about ready to have a larger impulse down.
It looks like the move to 2028 was a blow off top. And so when I'm trying to fit that into like a macro count, if you can even try to do that with such a new asset, it's like, is that the one? Is that the one wave of the macro count? If we move to like a daily, or as more time comes in, larger than that, or is that the 3 wave? And then I'm looking for an extension for the 5th when Bitcoin hits to 43. It's like how to figure that sort of stuff out. But I guess it's just even more difficult because it's so new.
Yeah. So if this is indeed going to be the direction of the trend, ultimately, in order for us to know for sure, you have to have a 5 wave structure up. So in order for this to be considered a complete emotive wave structure in the direction of the trend, you have to have a 1, 2, 3, 4, 5. So if this is indeed developing a motive wave, and we're going to have 5 waves, a 5 wave structure, then basically this would be, you've got your orange 1, 2, and then this structure here, which you can see more clearly on a lower time frame. This is your 1, 2, 3, 4, 5. So you're going to, like we talked about with XHV or any other asset, you've got, you still will have a 5 wave structure within this 3 wave. So this is a subwave of your 3. So you've got a 1, 2, 3, 4, 5 of your 3. So if this is indeed bullish, our next 5 wave structure will start here. So you'll have your 1, 2, and then you got a 1, 2, 3, 4, 5, and then this will be a 1, 2, 3, 4, 5. And then that will put in your 3-wave. And then you'll have a ABC correction for your 4. And then you'll have one more final impulsive wave up for your 5th wave. If this is indeed bullish and it's moving in an upwards trend. If it's not, this 5 here, this white 5 is actually could be an ABC. So this would be a 3-wave structure right now, is what this could be. So if all of a sudden we become impulsive this way, then our trend, could start to become 1, 2, 3, 4, 5. Now we would need a complete 5-wave structure down in order to say, okay, now we are bearish, or we have a full 5-wave motive structure downwards in a bearish direction. So ultimately we don't know until one of those two things happens, which is what EW gives us the ability to say, okay, this is either, right now we are either at the very beginning of a huge, motive wave up, or we are at the very top of a huge motive wave down. And
sorry.
No, go ahead.
So if we're at the top of a huge motive wave down, and this is such a new asset, we're going to go below the first wave impulse, aren't we? And doesn't that like mess everything up?
Down. Yep, you would break below here.
So then what do you do as far as like a macro EW count?
Then you assume if you break below here, then you are definitely 100% in some sort of a large motive wave down. So it's the same thing, just in reverse. So then, what you would be, if you're short, obviously, which I don't know if you can short this asset or not, but if you decided to go short, you would probably want to wait for this 1 wave to complete, and then a 2 wave, and then you would short here, and then obviously ride that sucker all the way down to, below $1 if you're going to have an entire 5-wave structure down.
But if on the flip side, we're about to start the new wave up, this is right around the same spot where we would look to possibly long with stop losses.
Yep.
And so the count fits both scenarios equally.
Exactly.
And we just have to see, and that's where the stop loss stuff.
Yeah. So right now, obviously, if you didn't buy down here, or if you didn't buy here, or whatever, this is your best risk versus reward spot in order to buy, because this is a 2-wave. So you're going to have a 1, 2, and then all of a sudden you're going to have this huge 3-wave up to $73. So this right here is your best spot to enter in order to get the most gains, moving forward. If you are bearish crypto right now and you think, okay, crypto's in a bear market, you would wait for this to have a full 5-wave structure down and then a 2 up, and then you would short that 2. So right now, this does not have 5 waves down. This has 3 waves down. I mean, this is clearly, which to me is why I don't think this is impulsive down. This is clearly a 3-wave structure here. And I don't know how anybody could argue that that is not a 3-wave structure. So that's an A wave to me. That's a B. And then you've got, a C, a 5-wave structure down here.
And on such a new asset, the time frame, you're on the 2-hour there, and you see the ABC. 2 hours is okay, 1 hour is okay, but nothing real higher than that to get the sub waves and stuff.
Well, you have to, on something like this, you really have to dig into the details in order to find out what it is, just because there's not a lot of data. So it's moving so fast. How old is this? This chart is what, back in March 17th. So, just over a month. And it's moving so quick, you're fractally speaking, you're your waves are going to do the same thing. You know, I mean, even though I don't like to chart based off of, you know, time, saying, okay, this thing better hit, you know, $400 by June or else I'm out. Even though I don't like to do that, it still does move fractally with time as well. So, I mean, your data points, everything's going to move quicker right now. So, you know, until it doesn't. I mean, there might become a point where all of a sudden it just starts to accumulate and it's developing 1-2-1-2s, or, you know, it's just some funky looking corrective structure that just goes sideways until, you know, the crypto market decides, okay, I'm gonna become uber bullish and, you know, go to 100K, or I'm gonna become uber bearish and go to 10K. You know, so it's possible that it develops some sort of you know, funky structure, but until it does that, it's clearly you know, moving quickly, and you have to zoom in you know, on a lower time frame. Which, keep in mind though, when you're doing that, it is less reliable, but you have to do that on an asset like this, because you zoom out, I mean, it looks like this. So you don't have a whole lot to go off of.
So just one last follow-up about 8, please. Let's say the 28 was the one wave up. Is that what do you have it as your count?
Yep.
That's a 1.
Yep.
So we got to use the fib extension tool. Can you just show me how to use the fib extension tool from that peak to get a possible extension target for the 3?
Yeah. So if this is a 1, let's declutter this just a little bit. You take your trend-based fib extension, right? And you go from the bottom of 1, so where 1 starts, up to the top of 1, where 1 terminates. And then assuming the bottom is right here, where it's at right now, say we do not get down to 1521, and the bottom was, what is that? The bottom was 1604. You take it to the bottom of that, to that wick, and then your 3 target for this structure is 75.26. Then your 5 target, roughly, I throw, you know, at the 2, just for shits and giggles, when I'm, you know, doing just a projection, which that wave will change 100% once you actually start to, you do get an impulsive structure up, then we can get a better target from there. But that would be your 3 wave of the entire move, which right now I've got my 3 wave going to 154. So this would be if that happened and the 5 did end here at 110, this 3 wave would actually fall just shy of, actually, no, it wouldn't. Yeah, so it would fall. It would fall just shy of 1618 from your 1 to your 2 of your larger degree trend, which could mean a couple things, which could mean either, okay, this is now a larger ABC because it didn't hit 1618. So that would still be a 3-wave structure. If it say it got up to here and it stopped, right? And then it starts to become impulsive this way. This here would be a huge ABC again, because we have not completed our 5th wave structure. Or if it falls short of 1618, the other potential scenario is that you will have a extension on your 5th wave. So if your 3 wave does not hit 1618, which is what happened to Trias, then you can assume, if it is impulsive and you don't start obviously turning downwards, then you can assume that you're going to get a 5th wave extension up.
Can I ask one more question?
Yep.
The fib extension versus the fib retracement. can they be used interchangeably in reverse? I always got comfortable with fib retracement. And so if I use the fib retracement and you put it at the peak of the initial impulse at about 21 bucks, and then you bring it down to the bottom at about 10.50, it shows that that $28 hit a 1.618. I'm on a 4 hour from the initial impulse, the first 3 candles. So
You're
like when you
talking
have your
about from here.
orange, no, earlier in your orange one at the beginning of the count in March. So that orange one, if I put put the bottom at about 10.50. You know what? I didn't even do the right bottom. Put it at the bottom there. Yeah, it still hits the 1.618. If the bottom's at 9.7, it hits a 1.618 on my thing almost, or right over there. Is there something to that? Am I totally off base with that?
I don't use that tool that way. So to be honest with you, I don't have a good answer for you.
Okay.
So I don't know the relationship between those. I use this tool to find my bottoms, my retracements. So for example,
This bottom we're having now, can you show how we could use that?
So in order to find, so in order to find your 4-wave, let's start there. In order to find where your 4-wave will potentially terminate at, you take your fib retracement tool from the bottom of the 2 up to the top of the 3. And right now, usually for the most part, well, heck, let's back up. Let's start at 1. So in order to find your 2, you start at the bottom of where your 1's, top of your 1, and this is a deep 2. So typically I like to buy 2 waves at 618. That's my sweet spot to where I buy. And I will average in. If it goes all the way down to 786, I will start averaging in down there. Now, if we lose this area here, the 786, I start to get really concerned that this is going to end up breaking the bottom. But this 2-wave does not get invalidated technically until it breaks below the origin of 1. So it could come all the way down here and tap 1051. It didn't break below it, and that could be technically a valid 2-wave. But I like to see 618 down to 786 at the most. So that is how to find 2s. How to find 3s is you go from the bottom of 2 to the top of 3. And we know that 2 was so there's a thing called it's not a rule, but the guideline of altercation, I guess, if you want to call it that, where we know that 2 was deep. So 4 should and could be shallow. So usually 4 waves will retrace 382. So, I mean, if I'm buying a 4-wave, I'll start buying at 382. And then I'll buy, all the way down, depending on how comfortable I am in the asset and what's going on and, what's happening in the space in general. If it goes down like here, if I wanted to buy this, as long as it does not break below 1327. So if 4 overlaps into 1, then it's invalid. Then you got something else going on. So this one, even though 0.5 is, a deep retracement for a 4-wave, it's still shallow compared to where the 2-wave went. So this is still a more shallow wave correction than 2. So that's how you find your 4s. And then to find your 2s again, because this entire structure now could be creating a 1-wave. It's no different than when you found this 2. You start at the bottom, go to the top. And I like to buy, which is exactly where I have my 618. I like to buy at 618. So that's at 1521. Now we've retraced 0.5. So 2 waves can usually, they usually retrace down to 0.5 to 786 typically, but I really like to see 618. So, that's where I would buy the 618. Now, if this all of a sudden becomes impulsive up and I got confirmation that, okay, we've got 5 off the low, then again, we've started a one wave potentially, so all of a sudden, if you get this, so let's say we get a 5-wave structure off the low, because technically right now we have broken below this 3. So I mean, this 5 could terminate anytime. It does not have to go down to 1521. As we've already seen, this is basically bouncing off a 0.5 retracement right now. Now that I'm in here, it looks like actually it looks like we might have 5 down. It's hard to tell from a fib standpoint. It doesn't line up. I mean, that could be a 5 putting in our 5th wave, but it also, it's just hard to tell. This could be a 1-2, and then this could be a 1-2-3. No, that can't be a 4 because that would invalidate. Anyways, so we'll go back here. So if for whatever reason we do get a 5 wave off the low, let's say it goes to there, and we have a 3-wave structure down to here into my 618, then that's a 2-wave. Again, then we have a 5-wave off the low, and then we have an ABC to create a 2, and we can assume, hopefully, that now we're going to begin in the direction of the trend moving upwards, and that's the place to buy. For a stop loss here, if you wanted to have a liberal stop loss, you would put it just underneath this low. So just under 1603, because if all of a sudden this price comes down like that, then that invalidates this potential being this potentially being a 1-2.
Awesome. That was awesome. Thank you very much.
Yeah. That makes sense.
Yeah, after I watch it a couple more times in chart while I'm watching it. But
Yeah.
awesome.
Yeah.
Thank
So that's, that's how I use my retracement tools. I'm sure, it's Fibonacci, so I'm sure there's some sort of, the way you're using them, I would imagine there's probably, some way to use it that way where all those levels actually match up perfectly. It's just, you're using it in reverse. And I've developed my habits based on using the trend-based fib extension tool in order to find targets to sell. And I, developed my habits using the retracement tool to find my targets to buy.
Yeah,
Really
I'm trying to develop good habits. So I'm trying to start the good habits and not start off bad habits. So thank you.
Yeah. So that's that. All right. You guys have any other questions? I think so. Next time, I think I'll probably get more into detail, maybe on the fib extensions. And obviously, guys, if you guys have anything that pops up that you guys want me to do more detail on during these meetings, by all means, put them in that channel, and we'll go from there. But you guys have any other questions, real quick, on any of this stuff?
I would like to know what time frame you prefer to use. 2 hours, 4 hours, 1 hour?
It just depends on what I'm looking for, and depends on what I'm trying to accomplish.
Yes, I mean maybe for us to use. What's a good time frame? Beginners.
It depends. Are you looking to scalp? Are you looking for a swing trade? Are you looking to understand where we are macro?
Swing trades.
If you're looking for swing trades, you want to be, you want to be on a higher time frame.
Mm-hmm.
If you're looking for, like let's use. I guess we can just use Bitcoin here. So think of it this way. the higher the time frame, so like on the daily, you cut out a whole bunch of noise. You can see the larger structures a lot more clear, which will give you a good idea of structurally where we're at. So this is clearly a 3-wave structure. I'm assuming obviously that we're going to have a 5th wave, and this is a 1, 2, 3, 4, 5, and that this isn't some sort of an ABC. So if I was looking to enter a swing trade here, I would have sold, the 3, and then I would be looking to buy, I would have bought down here, as a swing, and then, assume that, okay, we're going to be heading up to finish our 5th wave, because this could have been an ABC, which would have put in your 4 wave, your macro 4, and now we're on to our 5th wave. That's not the way, obviously, it unfolded. It unfolded in a 3-wave structure, creating an X, which this is actually what I did. I think I ended up getting out of my positions somewhere around, if I remember right, somewhere, after this violent looking drop here, once we failed to break above this C, and then we had this nasty, 2 days of just grossness, I'm pretty sure I got out of my spots here. And then that's when I started to assume that we're still in a corrective structure. So from a higher time frame, it just lets you see the moves and the waves without all the noise. I mean, if you're looking to scalp or looking to, just hop into a quick trade that will last, 4 to 6 hours, then you want to be on the minute chart.
1 minute?
1 minute,
Okay.
which I don't do.
Yeah, okay.
But just scalping.
Just scalping, yeah.
Intraday.
Yeah, if you're
Do
looking
you
for scalping,
see-
where you're wanting to find just a quick trade, a 4-hour, 6-hour trade, that's the duration of the trade. You're going to want to be on the 1 hour.
Do you see the same patterns on 1 minute chart?
Oh yeah, yep. It all moves fractally together. So it's like think of it like a gigantic puzzle. All of from the second chart, it's all moving in the same waves. They just, when you get down deeper or on a lower time frame, the counts become less reliable and they can morph. I mean, you're seeing them in more detail. So you're starting to really look at WXYs, triangles, triple threes, double threes, all sorts of different corrections, that can really throw you off, until you see something really, really clear, like a 5-wave structure and then a 3-wave. Again, you would still be buying based off of the wave structure, because it all moves fractally with each other. So I'm not seeing anything right now. I'm on the minute chart. So on the minute chart right now, I mean, this could be an ABC. This could be a 3-wave structure. Like that. So if you're looking, if you assume, okay, let's throw the fibs on it. Which that, from a fib standpoint, your C wave typically, this would be an A equals C roughly. It went to 1, 2, 3, 6. So we could possibly assume here that this is an ABC. If you're a scalper and you're wanting to go short, you're starting to be impulsive down. So this could be a 1, 2, 1, 2, 3, 4, 5. This could be a 1 wave, and then you'd have a 2, 3, 4, 5, which could be an A, which could be an A, or this could be a 1, 2. Well, it can't be a 3 wave, but you get what I'm saying. I mean, it's all these patterns fractally repeat from a lower time frame, all the way up into a higher time frame. So here it's even, now look at it on the hour. I mean, this is, as of right now, that clearly looks like a three-wave structure. So how this would fit into my overall pattern here is, this is a 3. If this is an ending diagonal, these waves will move in three-wave structures, right? So this makes sense that this would be a three-wave structure. This would make sense that this would be basically an A, and then we'll have a B, and then we'll have our C. And then that will put in our 4-wave. And then again, you'll have a 3-wave down, which would put in your 5-wave, and then that would complete this structure. So moving in on a lower time frame, you can confirm your bias to figure out, what this pattern's doing. But I personally don't like to trade. I'm not a scalper. I don't really want to sit here and, stare at the charts for hours on end. So I don't trade these small moves, but you could, or you can use them, to determine, which is what I did with this. I used it to determine my bias here and my personal, thinking that this is indeed a 1, 2, 3, 4, 5 with an ending 5th wave, diagonal, which will have a 3-wave up to create our 4, a 4-wave down to put in our 5, and then boom, our 2-wave. So hopefully that answers your question, but ultimately you can, you can use Elliott wave on any time frame, just depending on what your goal is and what you're trying to find out, really.
Thanks.
All right, guys. Well, I appreciate you guys coming to this, and I will turn this into a video. So I'll post it in the Discord, and we'll go from there. And again, I'll hopefully next weekend, I don't think I'll be able to do this because I'm actually at a baseball tournament for my son, but I'm going to try to do these more frequently. If I don't do it next weekend, then I will do it the following weekend. And hopefully you guys are enjoying it, and it's helping you guys out.
It does. Thank you.
It's been great for me. No one else come, please. Thank you. I'm
Yeah.
just kidding. Everybody come. That was really helpful. Thanks a lot. I really appreciate you.
Yeah,
doing
no
that.
problem. You guys have a good weekend.
Take care.
See you guys
Thank you.
later.
Thanks a lot.
Bye.
Bye.